Right, Shilpa. Many thanks for those details. Now, even as India's e-retail market scaled to $60 billion in 2024, its growth rate slowed to 10 to 12% during the year compared to over 20% seen historically. Now, the slowdown was due to macroeconomic and consumption stress. This, according to a report by Flipkart and Bain and Company. With almost 28 crore online shoppers, India has overtaken the US to become the world's second largest e-retail market in terms of online buyers, just behind China. The long-term prospects of India's e-retail market remain strong. To decode the report and the outlook for India's e-retail market, we are joined by Bain, the partner at Bain and Company. Manan, thank you so much for taking time out and being here with us on Startup Street. Now, as I pointed out, India's e-retail market is projected to exceed 18% growth, with nearly 1 in 10 retail dollars spent online, fueled by increased discretionary spending, right? If you could sort of take us through what's leading to this growth and how has India's e-retail market been so resilient?
Thanks, Arundhati. India's market has indeed been incredibly resilient off the back of a very compelling customer proposition. What we find is that the market is going to treble over the next 5 to 7 years, reaching about $170 to $190 billion. And it's really off the back of three things. Number one is an increase in shopper penetration. Specifically, today we're at about 275 million shoppers, but yet about 40% of social media users are not even shopping online. A big rise in affluence levels. We expect affluence and GDP per capita specifically to increase and cross $4,000 over the next 5 to 7 years. Quite interestingly, like when in an economy GDP per capita crosses $3,500 to $4,000 levels, that is an inflection point which triggers an incredibly important inflection point, which sort of triggers an increase in discretionary spending, an increase in sort of e-retail spend per capita. And we expect that to happen. In addition to that, fiscal and monetary measures are also going to help with this.
Absolutely. And before we get further into details of this report, if you could also highlight the key disruptors in the market that led to this unprecedented growth.
So look, quick commerce has been the defining disruption in the last 2 years. The market today is $7 billion, so 1 in 10 e-commerce dollars are actually spent on quick commerce. The market has doubled every year over the last 2 years. We expect this to continue with the market clocking another 40% growth over the next 5 to 7 years. And to put that into perspective, 50% of the incremental growth in e-commerce over the last year actually came on the back of quick commerce. In addition to this, hyper-value commerce has opened up low price points and really helped platforms and brands penetrate low-income and low-middle-income segments alike.
Sure. And some of the categories with high purchase frequency were, those is grocery, lifestyle and general merchandise, right? And they are set to contribute around 70% of the incremental growth of the e-retail market by 2030. If you could sort of take us through the trends that you're observing, what kind of penetration levels do you anticipate for these segments, and any new sectors that you're seeing that's on the rise?
Yeah, these high-frequency categories have indeed captured a lot more share over the last 2 years, right? Like, so if you go back to 2020, this was high-frequency categories of grocery, general merchandise, lifestyle would account for about a third of overall e-retail spending. It's already about 55%, and we expect this to go up to 70-75%. And each of these is going to be driven by different factors. But let's take grocery, for example. It's currently at sub 1% penetration levels. It's going to grow 4x and in terms of penetration, and that's off the back of quick commerce. Lifestyle is going to grow to about 22 to 24%, which is doubling. And that's going to be off the back of a continued increase in affluence levels, a shift from unbranded to branded, and also an increase in trend-first commerce that we are seeing. And ditto for general merchandise, growing from about 15% levels to 32-33% levels. So overall, I would say 2 to 4x increase is what you should expect in terms of penetration of these categories.
Right. And according to the report, right, the democratization of the shopping landscape with widening access to national brands in tier 3+ cities and underserved areas has been a key driver of growth. So do you see this trend continuing in the years to come? How much do you see tier 3 and beyond cities contributing to the e-retail landscape? And do you think the urban contribution will remain the same, or, are you seeing it fall? What's the, word on that front?
So tier 3 is at scale today, right? Like, so a few years back when we would do this, we would talk about tier 2 cities being at scale. And a lot of people would be surprised that there's so much demand in tier 2 cities. Today, I would say it's penetrated even further, and tier 3 cities are at scale, right? So 60% of shoppers added since 2020 have come from tier 3 cities. To put that into perspective, those are beyond the top 150 odd cities with a population of less than 1 million people, right? Like this is where a lot of the action is happening as penetration sort of deepens within the country. And we expect this to continue. In terms of overall market, about half of the GMV comes from tier 2 plus cities, and a quarter of the GMV comes from tier 3 plus cities.
Right. And, before I let you go, the report has also emphasized the importance of understanding the nuances of many Indias, with purchase behavior varying dramatically by age, region, city, and, e-retail maturity, right? Can you take us through the kind of behavior patterns you're observing between these different generations?
Gen Z is probably the most talked about generation in corporate boardrooms and social circles alike. Gen Z today, 2 in 5 e-commerce shoppers are Gen Z. And they do buy differently. They interact with these platforms differently. They're more experimentative in nature, shopping on, like 50% of them shop across 5+ platforms. They use social media very heavily for brand discovery, much more so than millennials. UPI is the predominant channel for digital payments for them. And there's some counterintuitive insights as well, right? Like, you'd expect this generation, because they're so used to scrolling on social media, you'd expect them to kind of go beyond the few top listing pages. But what we find is millennials typically go to 7 or 8 listing pages when finding a product, whereas Gen Z actually loses patience and stops at about 3. And all of these things have implications for brands in terms of, like, how do you show up at the top of the page? How do you ensure that you capture the sale and capture the attention and minds of these consumers?
All right, Manan, thank you so much for joining us on the show today and sort of decoding that report for us. All right, moving on.